Right, now let's take a closer look at the BOE's decision and the latest on Brexit. I'm joined by George Selgin, a senior fellow and director at the Centre for Monetary and Financial Alternatives at the Cato Institute. Welcome to the show.
Thank you. It's a pleasure to be here.
So let's start with the BOE raising interest rates to the highest level in nearly a decade. But how much does that reflect the overall health of the UK economy?
I'm afraid it doesn't seem to reflect it very much at all. This move was driven more by momentum than anything else. The Bank of England has a forward guidance policy. They've been saying for some time that they would start moving rates up, and by gosh, they finally got around to it. In May, they put it off, and I think they felt compelled to do it at last, having said they would, even though the numbers don't suggest that anything is different now from the way it was in May. That is, there's no news suggesting that there's any need for this rate hike.
So then, which are the groups and the sectors that are most likely to feel the brunt of the impact?
Well, of course, when rates go up, when the bank raises its policy rate, other rates will go up somewhat as well. So if you're a borrower, you're going to pay more. But if you're a lender, you might earn a little bit more. There are other effects as well, but some of them are quite attenuated in this environment where there's so much uncertainty. So one might have expected the pound to get a bit stronger, but that doesn't seem to be happening so far. There are too many other factors involved, and so it's not so easy to make predictions about what else will change besides the rates themselves.
So then what's your take on the timing of this rate hike, especially with all the uncertainty with Brexit?
My own feeling is, again, that it wasn't really called for by current conditions. I think the problem is that the Bank of England and other central banks too, the Fed has the same problem. They're putting the cart before the horse. They have a notion of where interest rates ought to be and what's a normal level that's largely informed by history. And they're determined to get them there. The problem is that if you have an inflation target, as both of those central banks and many others have, say 2%, and you're more or less at that target, then the only way you can stick to it and have rates go up is not by simply raising the policy rate, but by hoping that economic productivity will raise real interest rates. That's what we really want to see happen. Unfortunately, productivity is very low, and things like Brexit and the trade war that is now breaking out, those things hamper productivity, and there's not much that central banks can do about it.
So then, to what degree are we seeing these things weighing on the UK economy?
Well, to a very great degree, because in the end, it's not what the Bank of England does to interest rates that determines how rapidly the UK economy grows. It's real factors like productivity, trade, and investment. And I'm afraid that those things do not look very good. Investment spending in particular is quite down, no doubt in large part because of uncertainty connected with Brexit and also with the trade situation. And the Bank of England might wish that those things would improve and might even anticipate their improvement by raising rates, but it's not going to make them improve by raising rates. So I don't really think there's much logic behind this rate move. I wish that it were a desirable move, because that would indicate that good things are happening, but I'm not sure they are.
And even on the trade front, the UK is in a very sticky situation because they can't make any moves on trade pacts until they've exited Brexit. China has shown some interest in wanting to move forward. Obviously, they still have to wait for Brexit to go through. How can the UK navigate its trade ties while its hands are essentially still tied?
I don't know. It's as if they're giving a trade war and the UK hasn't been invited to take part in it one way or the other. I suppose that in one way it may be a blessing in disguise that they're not in a position to stick retaliatory tariffs on other nations. To that extent, ultimately, I think Britain will be better off because those tariffs hurt the Britons as much as anybody. But there is a real sense in which they're caught being spectators as these other trade developments take place. Right. And are being hurt by the uncertainty connected with their future moves as well.
So as we try and find some sort of happiness in this, are there any bright spots in terms of the outlook that you're seeing for the UK?
Well, the unemployment numbers are very low, rather like the situation here. It is very difficult to find bright spots. The price of oil and gas are coming down. That was a tough situation there earlier this last quarter. So there are some things that have gotten better. But I'm afraid this looming threat of a trade war, combined with all of the uncertainties connected with Brexit, simply mean that Britain is going to have a hard row to hoe for some time.
Certainly an unfortunate perfect storm there. Thank you
Yes.
so much. Great to have you on. George
Thank you.
Selgin there at the Cato Institute and Centre for Monetary and Financial Alternatives.